Shares of Apple taking a hit after offering a weak outlook for the current quarter, despite reporting results that beat forecasts on both the top and bottom line. Ian Fogg is head of the Mobile and Telecoms team at IHS. He joins us from London. Ian, one of the big concerns in this report was that iPhone shipments missed estimates, but others are saying investors shouldn't focus on this number. So how closely should investors be looking at it as to decide whether to buy or sell the stock?
Well, iPhone has been the growth engine for Apple for the last few years. It's about 63% of revenues this most recent quarter, down from 69% the previous quarter. But what's striking about it is Apple's pushed up both unit volumes from 35 million in the year ago quarter to 47 million this quarter, and also put up the average selling price of the iPhone at the same time. So the two fundamental parts of that business are both on an upward trajectory.
What about some of the comments Apple made about China and speed bumps there? What's your takeaway?
Well, China is an increasingly important market for Apple, and the largest screens on the iPhone 6 and 6 Plus have really opened up that market for Apple. But the China market overall is not growing as strongly as it was a year ago. That doesn't necessarily mean it will impact Apple going forward. Apple's been quite resistant to overall market trends in recent years. It's grown its smartphone business at times when most other companies have been struggling.
Let's turn our attention to the Apple Watch. Of course, Apple not breaking out sales numbers for that, lumping that into the others category, which includes iPod and Beats accessories. Is it too early to tell whether the Apple Watch is a success?
It's far too early. It's the first quarter it's been on sale. It's got version 1 software. What is striking is that Apple has said that demand has outstripped supply. And that is a good sign for the Apple Watch going forward.
We did see iPad shipments fall by about 200,000, fifth straight quarter where iPads fell short. Is it time to refresh that product? Are people moving away from the iPad and buying other tablets?
Well, Apple refreshes the iPad range about once every year. We do an update in either October or November. This year, Apple has taken some quite significant steps with the new version of the iOS software to make it run better on large screen devices like the iPad with a split screen mode. So Apple is doing things with the software to help reinvigorate the iPad product line.
We've talked a lot about different aspects of the report. What struck you as the most interesting takeaway?
I think the most interesting takeaway is that the fundamentals of the iPhone business are very good. Many companies can boost unit shipments, but often they sacrifice revenue or average selling price at the same time. Apple is distinct because they've boosted their shipment volumes and their average selling price very markedly year on year, and that's a tremendous sign of the strength of the iPhone business.
Does that mean Apple stock should be trading higher?
I think when you look at Apple, short term, the fundamentals are very good. Long term, and when you look across some of the other companies who've been reporting, the long-term risk sort of 10 years out is unless Apple can find something to replace the iPhone, they risk being outflanked by a major change in the market. Similar to what's happened to Microsoft, where their core Windows PC business has been outflanked by the rise of mobile. But that's a very, very long-term risk for Apple.
Ian Fogg, head of Mobile and Telecoms team at IHS, thanks so much for joining us. I'm Rhonda Schaffler. You're watching The Street.